Hello students, this is Professor Taramati Nakod from Government First Grade College Kundgol. Welcome back to Financial Accounting 2. Today we are going to discuss some of the problems on departmental accounts. In earlier class we have discussed about the theoretical aspect of departmental account. Today we will take up the problem. From the following information, prepare trading and profit and loss account for the year ending 31/12/2020. Opening stock. Department A 11,800, B 14,200. Purchases. Department A 75,900, B 50,000. Sales. A 1 lakh, B 80,000. Purchases return. It is only for Department A 900, so 75,900 minus 900, if you do 75,000 is your net purchases. Wages. Department A 9,000, then B 8,000. So these are individual items which are given. Now you see these are the common expenses and incomes. Now let us see. Carriage inward 2,500, rent and rate 6,000, salaries 11,600, advertising 8,100, general expenses 5,400, discount allowed 4,500, discount earned 1,500, insurance premium 600. Now let us take other information. The following additional information is also available. The Department A and B have occupied space in the ratio of 2:1. Okay, for rent we are going to use this. The closing stock of Department A was 21,000 and rupees 15,000. Salary is to be allocated equally between Department A and B. Okay, now before we go for preparation of trading and profit and loss account, let us now understand which ratio is used for allocating the different common expenses. Like carriage inward, discount earned, they are allocated on the basis of purchase ratio. The purchase ratio is, if you take the purchases, that is net purchase 75,000 of Department A, Department B 50,000. So the ratio is 3:2. So carriage inward and discount earned are allocated in 3:2 ratio. Advertising, general expense, discount allowed, they are directly related to sales. So sales, if you take the ratios, it is 5:4. Rent and rates are allocated in the ratio of space occupied. It is given, that is 2:1. Insurance premium is allocated in the ratio of closing stock. So as it is in the stock, insurance is on the stock, it is stock ratio, that is 7:5. Salaries are allocated equally between the two departments as stated in the problem. So we know how these expenses are to be allocated. Now let us see how trading and profit and loss account is done. So it is done in a columnar form. Okay, so it is departmental trading and profit and loss account for the year ending 31/12/2020. This side is considered as a loss, this side is considered as a profit. Now let us see the opening stock of Department A 11,800, B 14,200, total 26,000. Then purchases less returns, you have to take the net. So it was 75,900 minus 900, so net is 75,000, it is 50,000. Wages, directly it is given in the problem, 9,000, 8,000. So carriage inward, it is apportioned on the basis of purchase ratio, that is 1,500, 1,000, total 2,500. Sales, individually it is given for each department 1,80,000, so total 1,80,000. Closing stock was 21,000 and 15,000, total 36,000. Now you see it is more on the credit side. Take the total, it is 1,21,000, 95,000, 2,16,000. If you take the difference, this is your gross profit, that is 23,700, 21,800, 45,500. It is for Department A, B and total respectively. Now this part is called the profit and loss account. So your gross profit is brought down here. Now other expenses are shown here. Then here rent and rates, it is on the space occupied ratio 2:1. Okay, 6,000 is apportioned in 2:1 ratio, means 4,000, 2,000. Salaries are equally apportioned, okay, as given in the problem. 5,800, 5,800, total 11,600. Advertisement related to sales ratio. So 4,500, 3,600. It is on total 8,100. So here general expenses also total it was 5,400. It is distributed among these two departments in 5:4. That is 3,000, 2,400. Here also you are using the 5:4 ratio. On total you have to make into 5 divided by 9 into 5 divided by 9. So on this total if you divide, it is 2,500 and 2,000. Insurance, it is on the closing stock ratio. So 600 is divided in these two departments on 7:5 ratio. Okay, now here there is a income. Okay, so here it is apportioned in 3:2 ratio. 1,500 is divided between A and B department in 3:2 ratio. Okay, so now you can see the total on the credit side. Department A 24,600, Department B 22,400, total 47,000. Here the difference being your net profit. That is for Department A 4,450, for B 6,350, total 10,800. Okay, so it was a very simple problem. Then we'll take another simple problem. So in earlier problem we saw how the apportion of the expenses are done, but in this problem we will see all the expenses are divided in same ratio. It's a common ratio given to the allocation of common expenses. Now let us see this. A business is carried on in 3 separate departments. Indirect expenses are to be apportioned in the ratio of 3:2:1 to A, B, C respectively. So you don't have any tension to see which ratio will be taken for which expense. Okay, from the following particulars prepare the columnar trading and profit and loss account of the 3 departments for the year ending 31/12/2019. Particulars are given. Opening stock of A 1,800, B 500, C 100. Then closing stock 2,000, 500 and 300. Sales 11,000, 5,600, 4,900. Wages 2,700, 1,300, 900. Purchases are 400, 1,500, 1,200. Salaries 900, 600, 400. So ಇದನ್ನು ಇಂಡಿವಿಜುವಲ್ ಆಗಿ ಕೊಟ್ಟಿರುವಾಗ ನಾವು ಇಂಡಿವಿಜುವಲ್ ಆಗಿ ಡಿಪಾರ್ಟ್ಮೆಂಟ್ಗೆ ಬರೀತಾ ಇರ್ತೀವಿ. Now you see this rent and taxes. So it is 1,200. Insurance 480. Postage rupees 150. Bad debts. So bad debt is given department wise. For A 270, for department B 140, for department C 220. Depreciation rupees 600 and printing 300. So except bad debt, all expenses are allocated in common ratio, that is 3:2:1. Okay, now let us see the trading account. Now first you are writing as your normal trading account. You just start with opening stock, purchases, wages. Okay, the same way you write down all the opening stock 1,800, 500, 100, total 2,400. Purchases 4,000, 1,500, 1,200, 6,700. Wages 2,700, 1,300, 900, total 4,900. Now as you do it in a common trading account, sales and closing stock. Here sales 11,000, 5,600, 4,900. Closing stock 2,000, 500, 300, 2,800. So take the total on the credit side, then the difference amount is a gross profit. So here the gross profit for the department A 4,500, B 2,800, C 3,000, total is 10,300. So it is brought down to the profit and loss account. Here it is second part of your trading and profit and loss account. So it is on the credit side. Now you see the salaries. Okay, so 900, 600, 400, rent and taxes. So common ratio you are using 600, 400, 200. Insurance. Okay, so 240, 160, 80. Postage 75, 50, 25. Bad debt. Okay, individual department wise, if it is given, then you have to write 270, 140, 220, total it is 630. Then depreciation is on common ratio 300, 200, 100. Printing common ratio 150, 100, 50. You can see these are allocated in common ratio. Now you can see this total. From that total, if you see the difference is your net profit. So for the department A 1,965, B 1,150, for C 1,925. Total net profit is 5,040 rupees. Okay, so with this we are going to conclude today's class. In today's class we saw how to prepare trading and profit and loss account for the department, and we have also learned how to apportion the common expenses when common ratio is given, and when common ratio is not given, then you have to see what is the reasonable or appropriate ratio for allotment of expenses to each department. We will take up some more problem in the next class. Till then, take care.